So, hey, Keith, there's been a lot going on in the real estate world over the last couple of weeks. We have a new administration, possibly some new things coming down the pipeline. And I believe the real estate industry as a whole, we're kind of sounding like a broken record, right? Interest rates are at an all-time low. Inventory is at an all-time low. Over the last few weeks, what have you seen in the mortgage industry that you can share with us, or what kind of mortgage update could you provide for us today as we are heading into spring and as new things are starting to come to fruition here in 2021?
Sure. But I think we're starting the year kind of where we ended this past year. So you mentioned kind of what's here in the last couple of weeks, and there's really not a whole lot that's new, so to speak. We're just seeing a lot of what started to unfold here to wrap up 2020. Again, kind of roll into 2021. So as far as rates as a whole, we still are seeing them right at, if not, just a hair above a new historic low, which obviously this isn't a rate quote, but for most folks with strong credit and a decent equity position, are still seeing rates under 3% on 30-year fixes. And prior to COVID, the prior 30-year fix was more like 3.25. So still kind of at, if not below, the prior historic low, and the new historic low, which is more so in that maybe mid to upper 2 range. Again, very, very good. And it's going to be kind of interesting to see how things unfold from here with the change in the presidency, the vaccinations. We have a lot of historic events that are still, occurring. And for anyone to really, at this point in time, still gauge and tell you exactly what's going to go on with interest rates or what's going to be the next trigger in interest rates going higher or lower, I think is anyone's guess. We're hearing educated guesses out there, but still truly a guess. So, what I'm continuing to advise folks of, whether they're looking to, make that purchase or possibly refinance, we have a lot of folks still refinancing, is that if you're comfortable with where things are at now, and maybe you're going to be a little disgruntled if things tick up a bit, that now is the time to lock in and take advantage of what we know to be these historic lows, versus if you're really feeling that interest rates are going to go lower, and you're maybe going to be upset if things get just a tick better, and understand the risk that things could go the other way, then okay, potentially hold off. No one really knows for sure, but I personally don't foresee rates going much lower if they go lower at all, and foresee interest rates ticking up a bit, especially if we're seeing the economy reopen and the stock market keeping the pace that it's been at, which is stock market's been reaching new historic lows for various reasons. So if we see this economy flow and open like we're seeing currently, I think we're going to see interest rates start to tick up a bit. Nothing crazy, but coming off this historic low.
Right, exactly. So I think it's definitely worth visiting, somebody, especially somebody who maybe has lived in their home for a while. It's definitely worth a visit to take a look at the numbers to see if they can actually sell that home, qualify for a mortgage, and still have a pretty manageable payment, especially given where home prices have headed over the last, in 2020 and, in the foreseeable future for 2021. I don't like to make big, huge, definitive statements. And then yet I find myself saying to people, you really need to think about selling if you're thinking about it at all, because given the inventory, that just doesn't seem to have been a better time to sell than now, or at least considering it. So somebody who might be thinking about selling now and moving up, it's worthwhile to take a look at the numbers, because, interest rates are still at this all-time or very near historic lows. So it's worth taking a look at those numbers.
And Liz, I think we've had a couple of customers where, it could make sense for them to refinance, but as it was making sense for them to refinance, looking at maybe that move up purchase when they're lowering interest rate, getting rid of mortgage insurance, taking that equity that they've gained and rolling into the new home where their payment was going to be, very similar, maybe just a slight increase, but for a longer term property, or property that was more suitable for their family long term. And I know we're talking about
right,
like
exactly.
That. Just a lot of opportunity around, worthwhile taking a look at, just making sure nothing's being missed.
Yeah, absolutely. I had a really cool conversation with somebody yesterday who told me that they had just recently refinanced and their payment went down, But he actually shared a strategy with me that I think might be helpful if people are thinking about refinancing. If you are thinking about refinancing, contact me or Keith so that, you know, one of us can go over those numbers with you. What he said is that he refinanced. His payment was lowered by $300, and he said that he is still making the old payment so that he can now start contributing a higher amount toward his principal payment, and therefore, you know, working on that principal and continuing to build that equity in his home by just simply making the old payment because the old payment wasn't stretching him. So I think that I actually thought about it and wanted to share it today with all of our people, because I think it's worth taking a look at those numbers. If you can refinance, do it. And if your current payment is not a stretch, continue to make that old payment and start working down on paying that equity, and continuing to build that nest egg in your home if you're deciding that you want to stay there, or if, you know, your current home truly is your forever home and that's where you want to be.
Cool. That's an awesome strategy.
Yeah. Awesome. Perfect. Well, thank you so much, Keith. I'm so happy to be doing these live videos with you once again, albeit a little bit differently than we have done before. And I
Wow.
think our people should, huh?
But we're back.
We're back. We're back for 2021. Awesome. Thank you so much, Keith. I think our people appreciate all this information. And where can they reach you?
Please call me anytime, 818-521-8515, or all my contact info on my website, keithrenault.com.
Perfect. And you guys know you can always reach out to me, 661-904-8471. Have a great day, everyone.
Thanks, Liz.
Bye.